Good evening, ladies and gentlemen. It is the Stonk Dad speaking, and here's another video. I've been having a rough week, guys. I'm not even gonna lie to you. The data has been horrific to look at. I'm not grasping this downtrend very well and predicting it as much as I would like to. I have been predicting some downside, like yesterday, which I'll go over in this video. But I'm not executing on these downward momentum trades, which is kind of hard for me because these are usually the best trades to get into because you can really make some money on the downside. But in this video, I'm going to be going over that, kind of my predictions on SPY and where the market's going, and then why the data has been so horrible to look at, and we'll be back testing a couple of things to see what's going on. All right, guys, let's get into this video. Okay, so as you see here, I did post this on Twitter last night before we got the massive sell-off today. But this is just a chart of the S&P 500 SPY, and it basically has all these gamma exposure levels, the aggregated gamma exposure levels, which means it's all the expirations of the gamma exposure put into one chart pretty easily for you, so you can overall see the largest levels on this chart. So these green levels are the positive gamma exposure levels, and then the red ones are the negative ones. And then this gray area in between here, there's darker shaded ones and lighter shaded ones. That they're the same thing, but any of the darker gray or the lighter gray are called ghost zones, and those are the areas in between gamma exposure levels where price can freely move in between those levels without any dealer interference, with price rejections with support and resistance. And I can explain what that means here on this chart. So this is an hourly chart, and it dates back all the way to May. So it goes May through today, which is August, August 17th or so? Yeah, August 17th. So within the time period of about 3 months, this is what we have here on this chart. So you can see that we freely move between these gamma exposure levels in May. We pretty much went here on the downside, and then we quickly came up and retested it, rejected, and then finally we did break above it. But these price movements in between these gray areas are very, very huge, and they happen very, very quickly within the span of a few trading days. So last night I did post this chart, and we were hovering around this red gamma exposure level, which is 440 on SPY. So yesterday we were hovering around this red one, and let me go back to that tweet here. Hold on. Let me pull it up here because I think that that's pretty important. So let me pull this up here on my Twitter. So let me show you what I was talking about last night when I was looking at this chart. Okay, so this is the gamma exposure chart. So this is a different chart that you see right here on your screen. Oh, let me make sure you guys can see it. Hold on. Oh, geez, I just messed that all up. Hold on. I'm messing everything up here. Okay, so yeah, you guys can see it. So on this chart here, this is just the gamma exposure. It shows the gamma exposure levels just on a little bar chart instead of the price action chart as well as the lines, but it's the same thing. So I showed this. I said this is getting real scary for the market. There's a dark pool level that we just barely held onto at close at the 439.60 level, but it's fairly thin. The other large one is 440, which we broke to the downside today. That's where we closed at 439.60. If that 440 is not reclaimed by bulls, we can move back to the 432 gamma exposure level on SPY, which I talked about yesterday. So that was my tweet last night before the trading day today, and this is what the little visual I gave you guys. So this is the 440 gamma exposure level, this shaded white bar. So that was the price that we were hovering at yesterday, and that 432 level is the negative gamma exposure level to the downside. And you can see that there's not much support at all. There's no green bars at all to hold us to getting to that level. And you could see what exactly happened today. It didn't get quite to 432, but I think it bounced off 436. So that goes right to my point of these ghost zones that I was just talking about. So we are right smack dab in the middle of this ghost zone to the downside. And you can see here how well they filled to the downside and upside each time. we pass through these gray areas, and you can see once these gamma exposure levels get really bunched up like they were up here, we did chop around for like a couple weeks or so around the 445 to like 455 level or so. You can see how many times we went up and down within these green and red gamma exposure levels. So we did pass through one just the other day. What day was this? The 15th. Yeah, Tuesday and Wednesday. We passed right through this small ghost zone, which was like about 443 to 440, a $3 move. And now we're breaking through this next ghost zone, which is a lot bigger than the one from earlier this week. So just be aware of that, guys. These ghost zones fill, and they work pretty dang well from the past year, 2 years I've been using these. These work very, very well. So just be aware of that. We are in the middle of this ghost zone, and we could definitely see a little bit more downside before at least a little bit of a relief mounts. Yeah, I have no bias towards whatever the market goes, bull or bear. I do not care as long as I make money whichever way. So that kind of relays us to the next point about how horrid data has been this week for me to trade. It's been very, very difficult for me to trade. So let's go over to market net flow. Now this was today's market net flow. It didn't really look great at all for the entire day up until the end, where puts started to really come up. So let me take a screenshot of this, and let me show you just on this price action or this flow chart what I mean. So ideally, for my strategy, when I look at market net flow, the divergence between calls and puts have to be very, very wide. Now, what I mean by that is if there's a bearish day, puts have to be well above calls in order for me to get into short play. So in this case today, calls and puts were neck and neck all day long. It was so frustrating because just seeing the market drop and drop and drop, and flows not really matching up with price action. We have no edge in the market. I just stay out completely. And that's exactly what happened yesterday as well as today when we got these massive moves down. We got like about a $10 move to the downside within the past 2 trading days. So it was pretty frustrating for me to not be getting into these awesome trades, and data like this is not working in your favor. So when I look at this, based on my strategy, I never ever get into a short trade, even when flow is looking like this. So it didn't really start moving until the very end of the day when we were practically at lows of the days anyway. So I just stayed out for the most part. Yesterday and today. I can show you what yesterday's looked like. It was a little bit better than it was today, but today obviously we did get that really big move to the downside, which I missed. So that's to give you guys a little bit of context of what I look at in market net flow and data every single day. I always look at market net flow before I get into anything, and that's where I base my decision making off of. And when it looks like this, I stay clear away. Usually when it's like this, it means chop, but yeah, today obviously it was just straight down. So let me look at yesterday and show you guys what yesterday's looked at, and I can explain why I didn't get into any shorts yesterday as well. Because we did move from like 444 all the way down to 440. So it was a little bit better looking yesterday, but it was almost practically the same thing as today, where calls and puts were neck and neck, and it didn't really start to really show until later on into the day when puts started to go up a lot. We could have caught a pretty nice trade to the downside with this red convergence play here, or maybe even this one too, because this one almost caught the top. But let me screenshot this so I can show you guys a little bit better as well. So this little red convergence play you could have caught to the downside there. It did turn gray there, but then it flipped red again about in that area, which was about a $1 or so move to the downside. But other than that, guys, when flow is looking like this, pretty much for more than half the day, I tend to stay out. It looks really, really bad. I look for wide divergences in puts and calls, and it's really, really good when when calls or puts are below zero, the net zero premium level, which is right here. And I can show you an example of what that looks like too. So if I go to, let me see, what was a good, I think it was like the 4th or the 3rd or something where it looked really, really good. No, I'll keep looking here. Yeah, so something like this. So when flow is really, really good, especially earlier on in the morning is when I really pay attention to it. But you can really see a really good trade when puts are right here. Look how high puts were. So puts were at like 20 million net positive at like 7 in the morning, which is insane. So you could have caught a really nice trade when this green convergence flipped about here. You did miss $1 or $2 to the upside, but you did catch another $1 or $2. $1 or $2.50 or so to the upside on this flip. So I always look for that wide divergence between puts and calls, and ideally it's even better if puts are below zero if it's bullish, and opposite if it's bearish. So that's just what I look for, guys. Not a great data. It's not a great day for data traders, like flow traders like myself. So I know a lot of people have been having difficulties trading to the downside as well. So I'm glad it's not just me. But yeah, guys, we'll see what happens tomorrow. I hope this video helped you. Let me know down in the comment section what you guys think, and let me know how you guys are doing in your trading. Hit the subscribe button. I would really appreciate it. I love all you guys. I love all the comments. I love all the maturity level, because there's a lot of toxicity in the finance sector, especially on social media. So I appreciate all of you. I love you all. See you tomorrow.